Hello, everybody. So I'm just going to share my screen really quickly before I get into this. I'm moving out of the way. So hi, guys. So this is your first video. It's only going to be 10 to 15 minutes. And I'm actually going to have a timer on my phone just so that I don't go over time. And then we're not going to be able to get through the whole of bootcamp number 1, the intro to Forex and currency pairs and input trades. We do have the slideshow here. It's the same as what you see on the hour video for Kylie's bootcamp, and it's also the same one that you have underneath that, and it's also for the quiz. So it all is in unison. The only difference for this video is that it's going to be 10 to 15 minutes. I'm going to break it down a little bit more, use simpler terms so that it's easier for you to understand, and to make sure that we just have shorter videos that you can watch on your TV from YouTube, that you're able to just sit back and relax instead of having it on your laptop. You can just have it on your TV. I find that the easiest way for me to learn as well. And also I have ADHD and autism. Some of your mommy and daddies, you don't have an hour to be able to spend watching a whole video and listening to it all, because somebody's going to interrupt you or your mind wanders, whatever it is. This is just to help you guys. So as I said, this is bootcamp number 1, introduction to Forex, currency pairs and inputting trades. So we're going to start off with what the foreign exchange market is. Now, I'm not going to read out all of this. I'm just going to explain it in a little bit more simpler terms for you. So what I want you to do is think about you going to the post office and you're going up to the north. You're obviously going to exchange your euro to the pound to ensure that you have pounds going up to the north to buy things. So that is a currency exchange. It's a foreign currency exchange. That's what it is. So when we talk about the foreign exchange market, all it is just the information of how much a euro is to a pound in the difference. So say a euro is 120 and a pound is a euro. It's a pound, sorry. So that is the foreign exchange market. And what we do is we buy and sell depending on how much that currency is in demand or supply, or how much the currency has appreciated or depreciated over time. So that's your inflation or deflation. Now, that is all you need to know about the foreign exchange market. That's what we do, is that we buy and sell depending on how much of a currency is and the valuation or the strength of that currency. Now, it's not only going to be currencies that you're going to be using. There is also commodities like gold or oil, or your indices, which is your stock market, like the SPX 500. But we will go into that more detail. Now, the easiest way for me to explain how the market moves, and you can see it in this photo, is your supply and demand zone. Now, your market will always want to be in the equilibrium. I can never say that word, but all that word means is that it wants to be equal. So I want you to think of a van, okay? I know I'm very good at coming up with like different ways to think about this, and it might seem strange, but I want you to just think of a van. Think of your van going to a port, picking up its fish and bringing it to a supermarket. Where he gets the fish, that's the supply zone. The supermarket is its demand zone. So it goes from the supply zone to its demand zone. So the fish to the supermarket, from the supermarket to the fish. And that is all that is. Now, there might be higher supply at one stage or higher demand at another stage. And it's just collecting all of that along the way before it goes back to either the supply and demand zone. And so that is how it works. So that's how the market moves up and it moves down. It's looking for the point of supply and it's looking for the point of demand. Sometimes the supply can be more than the demand. And it's just collecting up that supply on the way before it drops back down to the demand zone. Now, who participates in the market? Now, the central banks, I want you to all understand this. A central bank is the government-owned bank. So if you hear this on the radio, or if you're signing a loan or whatever it might be, you will hear that it's been approved by the Central Bank of Ireland, which used to be the Bank of Ireland. So that is the Central Bank of Ireland, is who makes the rules of how banking is done in Ireland. It's the same as in America. They have their central banks. Now with them, they make money by using our money to make money. And so if you put money into your Bank of Ireland or your AIB, they will use that money because they're being paid to make money for themselves. And that's how the government gets more money from your taxes. And I think of commercial banks as your Revolut, your Bank of Ireland, your AIB, Ulster Bank, whatever banking system that you use, they're a commercial bank. And that's how we actually put our money into a bank, use our card, get a loan, whatever it is. Large institutional companies are your multinational companies, so your Coca-Cola or Samsung's what's wrote there. You could also think of Apple. You can think of 7-Up, whatever it is. It's a company that is renowned nationally. It's not your small little companies, like your local shop or anything like that. It's just a big company with a lot of money. Now, for your central banks, your commercial banks, and your large international companies, they are actually the ones that will make the market move the most, for the simple reason that they have millions to billions of euro or pounds or USD to put into these financial markets to make it move. Whereas your fund managers, so these are hedge funds or FX brokers, if they're unregulated, and they we use them to put our money in. So if you think about a financial advisor, you might have 20k in your bank and you want to invest it into something. They're a fund manager, but they might manipulate the rates and spreads because they use their own systems. So you will lose your money, and that they will make money off. That's why they're unregulated. We use regulated brokers like Sway or FXway at that when we used to use MetaTrader 5 before, and they're different to these fund managers. Now you also have retail traders, which is us, individuals or small businesses who use their own money to trade in the Forex markets. Everybody else uses other people's money. Make sure that you understand that. So every other entity within the market would use other people's money to make money for themselves. Whereas us as retail traders or small companies will use their own money to trade in the financial market. And what you can trade. So what you can trade, there's a variety of different things. So the online exchange of currencies worldwide is so vast, and there's so many different things that you can actually trade and invest in or make money off of, that there's no end to you being able to make more money than you actually are. Some of the ones that we do is currency pairs. So what that is like your USD or your euro, like the post office. We have crypto, which is your digital coin or your meme coins. We have a lot of those that we do. It's a little bit different than your Forex, but we still have education on that as well. We have commodities, which is your oil or gold. You can actually do beef, you can do butter. And then you have your indexes, which is your stock markets. So your SPX 500, US 30, and NASDAQ 100. We will go into more detail about these as well. So they're just a tiny little bit of what you can trade. There is a lot of other things that we do. Most of us in OBG will trade your indices and your commodities and your currencies on the Forex exchange market on your Sway. Now, your crypto, that's a different method that we use. And a lot of people don't do trading like as in buying and selling. We do investing. Now, we're talking about currency pairs, and I know that might be a strange word that you're just not understanding. Why is a kind of currency pair? So there's two different types. There's a major currency pair and there's a minor currency pair. What you need to know here is that the US dollar is the universal currency of the whole entire world for the time being. What that means is that even countries in China, instead of actually selling their goods in the Chinese currency, they actually use the US dollar because it's universal trade. It's the same in pounds. In the UK, they actually use the US dollar when selling goods or transferring stuff across the world. The US dollar can be exchanged very easily, and a lot of people are using it to be able to exchange their goods for the simple reason the US is a major country, and a lot of our services are imported and exported from there. Now, your minor currencies are just currencies without the USD. So the ones that you need to really take into heed here when you're actually trading is your USD pairs are major, and anything that ends in JPY. So that's the yen. So odd JPY and your JPY, pound JPY, all of those will be used as well in your minor majorly during the Sydney session. So that would be the ones that we would actually majorly trade in. Now, I want you to understand most people will start off in currencies, but we also move on to your commodities and your indexes because you make more money off them. Your currencies, they move very slowly. You don't make a lot of money off of them unless you're using high lot size, but we'll get into that as well. Now, your currency pairs. We're coming up to 15 minutes, so I'm just going to end it here on this part. There is a way that you need to read these. So if you can see Euro and USD there on the left, you have a base pair and a quote pair. And you need to know the currency strength when doing binary a lot, with your Forex, not really. But with binary, understanding your currency strength is very vital for you knowing how to trade. So if your Euro is stronger than your USD, you will buy. But if your Euro is weaker than your USD, you would sell. And that's how you would read your currency pairs. And when looking at the strength meter. So if you go to livecharts.co.uk, currency strength, just there at the bottom, you'll be able to see the actual strength of the currencies, and we will go and look at that as well. So this is everything that I'm going to show you for today. And the reason why I wanted to make sure that we had a little bit of information to start you off on is just so that you understand how trading works. I know I might have spit a lot at you, but you can rewatch this video. Again, it's only 10 to 15 minutes. That's why this is so good for you. And I hope you do understand it. If there's any questions, please reach out to me or Ava. We'd be more than happy to help. And yeah, I hope you have a great rest of your day.